Brad Rosley. Thanks for tuning in today. Today I'm going to hit on one of the most basic elements of investing. What's the difference between a stock and a bond? I know it sounds simple. Don't be embarrassed if you don't know, because most people actually don't. Stock versus bond. Stock means ownership. You actually are buying into the actual company. The owner of the once privately held business is selling some of their stock to the general public. Hence, the company goes from being a private company to a publicly owned company. If you buy stock in McDonald's, for example, you are an actual owner of the company, albeit your few shares are probably a very small, teeny share of the actual company's value. A bond is a loan. If you buy a loan, you're not really buying a loan, you are loaning to either a company, which is a corporate bond, the federal government's a U.S. Treasury bond, or a municipality, that's a municipal bond. It's a loan. It generally runs with a period of years. You loan the government or the company money for a set period of time. After that time, they will give you back your principal, and along the way they pay you interest. It's that simple. If you remember one thing, remember this. Stock is ownership, bond is loanership. Please subscribe to my site so that you get more information going forward. You can look at my business website at fortunefinancialgroup.com if you want more information. Thanks a lot for listening. Have a great day.